All right, everybody, welcome back to another video here on Financial Friends. Thank you so much for taking some time out of your day to join me. Today, we're going to be discussing what stocks I am selling and what stocks I am buying. So I hope that you are excited to find out those. Before we get into the video, real quick, if you're new to Financial Friends, this is a community of people who love business, finance, and investing related content. I think you could probably tell that from the title and the kind of vibe of this channel. So if you're into that, go ahead, hit the subscribe button, join the friend group, and stick around. And thank you so much for taking the time out of your day to watch this. If you're already here, you might as well hit the like button down below. It takes just a second and it's free. And so is hitting the subscribe button. So make sure if you're not subscribed to do that as well. Let's go ahead and get into the video. This is going to be a bit more of a rambly kind of me talking to you, really sharing all my thoughts and opinions. I'm going to cover how I got into these stocks, either why I'm getting out of these stocks or why I'm buying more of all of these stocks. And the first one up that I am selling and have already sold is Rivian. So I got into Rivian at IPO price. I can't even remember what that price was at now. It was either $72 or like $78. And I purchased this stock kind of on a whim. I really just heard about the IPO last minute, looked into the company, thought it was a cool idea, knew that I liked their cars, knew I liked the way that the company looked. And because they were partly based in Michigan and backed by Michigan-based Ford as well as Amazon, I'm like, you know what? Let me go ahead and try and even see if I can get some shares. There was this whole IPO process I had to go through over on SoFi, so I wasn't even sure if I was going to get some shares, and I did. I got 3 shares. So I had 3 shares of the company. And I knew, don't get me wrong, I knew this was going to be an absolute wild ride. And if you take a look at the chart, you can clearly see that it was a wild ride. If we view this 1-year chart, we could see back at IPO, it shot up to $129. At one point, it was all the way up at like 170 something. You're not really able to see that here on this chart. But it shot up and the price was up there. Now, I couldn't get out of the stock then without some form of penalty and extra taxes, and then potentially being banned from SoFi's IPO platform. They want to give priority to people who are really looking to identify early stage companies and get in, not just people who are looking to make a quick buck. And for that reason, I couldn't sell any throughout the first 6 months of the company being public. Now, that was really when it saw its heyday. You could see on the chart, ever since then, it has just been a slow and steady decline. The company does not make any money. Actually, it loses $14.53 per share as of the sort of trailing 12 months date. They don't earn. They have no PE ratio. You can see that here. And the macroeconomic environment is not going to be super kind to this company, at least in the foreseeable, year or so. And for that reason, I'm out. No, I'm just kidding. But there's a few other reasons that go into it. One of them is long-term. There are so many EV companies, and I don't know which is going to win. We've seen Amazon, I think. We've seen Rivian not be able to fulfill Amazon's orders. We've seen Ford kind of back out a little bit. We've seen the massive headlines. There's been a ton of negative news around the company. And when I kind of saw that, I decided to take a look inward at myself and determine, why did I buy this stock? I bought it off a whim. I bought it for fun. I bought it because I thought it was cool. And it just doesn't fit the theme of my portfolio anymore. I have listed here, it's an outlier in my portfolio. That's going to be the theme with the next stock too. It's an outlier. It's unproven thus far. I have no reason to believe they will be successful. Yes, they're expanding. Yes, they still are producing cars. One of the few big EVs that are really, truly producing cars. And I do see them on the road here in Michigan. But for me, I just don't have a good understanding of the future of electric vehicles. I know they're expanding and growing, but so was the car industry or the automobile industry initially when it first started. And there's about 3 to 4 big companies now, and that's it. Really just 3 big ones. And so it's kind of one of those things where you have to look inward and say, why did I buy this company? And those ideas and thoughts, they just don't line up with the future of where I see my portfolio going, especially with the fact that it's unproven and I just don't have a good idea of the EV and automotive space. And so for those reasons, I am out of the company. Now, I did take a fat loss, but something I've always preached with any stock, if you don't like it, if you don't want to support it and be an investor in it, or you don't understand the business, that money is better put elsewhere, and that's what I did with Rivian. The next stock, and the second stock I am selling out of or have already sold out of, is Palantir. Now, Palantir is one of these stocks that I got into at the very, very, very early stages of my investing career. Not of the stock, but of my own personal investing career. I was a little bit naive, thought that I knew what everything was going to happen and how everything was going to go. And really, to put a finger on what Palantir is as a company is insanely difficult. We're going to pull up their profile here and kind of read what they are. Palantir Technologies, and I'm reading down here from the bottom, builds and deploys software programs for the intelligence community in the United States to assist in counterterrorism investigations and operations. And the company provides Palantir Gotham. They also have a few other softwares. I'm no longer reading from this. It doesn't really look like they talk. Oh, Palantir Foundry. And I think there's Palantir Apollo. So they do three kind of core different things within their business, none of which I could fully explain to you. I thought I had a good understanding at one point, but I just don't. I quite simply just don't have a good understanding of this business, and I can't not practice what I preach. If I don't understand the business, how they stand to profit, how they stand to lose money, how they stand to fail or be successful, I shouldn't be in this stock. Now, I was holding onto this stock because I literally had nothing left to lose. I was down like 60+% in this company with an average price of like 15 or 20 something dollars a share. I don't even remember. I was down big. And so I just decided to get out. I feel like the company has some really big ties to government. I'm unaware and not staying up to date on their contracts, which is a big thing with Palantir. You need to stay up to date with who they have as a customer and what customers they have acquired. The company has not made money or is not currently making money, at least in the trailing 12 months. We have a negative 25-cent earning per share with no PE ratio, and it is just another outlier in my portfolio, not fitting the overall theme. Now, this right here is going to be the end of the stocks that I am selling. So let's go ahead and dive into two of the individual positions that I am focusing on and I'm really putting a ton of money into. Number one is going to be SCHD. That's going to be an ETF from Charles Schwab, the US Dividend Equity ETF. I talk about this all of the time. It's a straightforward, low-cost fund that invests for dividends. And you can see the highest weightings here in their portfolio: Merck & Co., Pfizer, Amgen, Coca-Cola, Pepsi, IBM, Texas Instruments, Verizon, Lockheed Martin, and Home Depot. These are opportunities for cheap dividends. As this ETF continues to fall, I'm going to continue to buy because they're paying out the same amount. And as the price falls, it means I'm buying that dividend essentially at a cheaper price, which is exactly what I want to do. Not only that, but I want access to these companies that are profitable, that make money, and that pay money back to their shareholders. You can go ahead and view all of the holdings here on the website, and there's a ton of companies in here that I don't normally have exposure to, a lot of financials and other different food companies, etc., that I don't normally have direct access to. So I'm going to get some indirect access to those companies to help weather the storm, but also for dividends. That's the main reason I'm going to own this. You could see the makeup is mainly financials, along with some tech and consumer staples. Again, those are like those food companies that I'm kind of talking about there, as well as healthcare, which is a good place to be in at this moment in the market. The next one that I held on to through the storm, and I'm continuing to hold on through the storm, and it fits more into that Rivian Palantir area of unprofitable companies that I was investing in, is SoFi. But I'm not selling SoFi. I am investing more heavily into SoFi. I've been picking up shares at a cheap price of $7.01 and below. I was buying shares at 4 something and a little bit at 5. So I'm lowering my cost basis significantly in this position. This is something you could see over the last 6 months has just plummeted. I was a buyer when it was IPOE, back in the day when it was first kind of coming in as a SPAC. I was a buyer at $15. I was a buyer at $22, and I'm still a buyer, of course, at $7. This is a business that is a long-term play for me. It is one that I understand but it is my core unprofitable play. I think you kind of saw that with the release of Rivian and Palantir from my portfolio. And the fact that I'm focusing more on dividends kind of shows that shift from, okay, I'm done with these unprofitable, risky businesses. I'm going to become a little bit less risky. I'm going to put more money into dividends and solid companies. SoFi is the one opposing stock, right, to that view. It's the one that doesn't fit the description. It is the exception. That's the word I was looking for. But I love SoFi as a business. They're continuing to grow user base. They're continuing to grow, which is a big, big thing in general for this company. And they are going to be up against some stiff competition in general with this fintech space. There's a ton of competition, a ton of competitors. It's really easy in most cases for people to just go ahead, hop on their phone and pick up a new app. But one thing I like about SoFi, and a core reason why I'm continuing to invest in the business, is it is sticky. They have credit cards, they have loans, they have direct deposit opportunities with actual banking features and good APYs at 0.7% with no direct deposit and 1.25% with direct deposit. They have investing where you can keep your Roth IRAs and other stocks and cryptocurrency. These are things that once you put your money into it, you are tied to this institution. SoFi has that advantage. Why? Because they are a jack of all trades, an all-in-one platform where they can pick up users from any one of those categories. Want a credit card? Want a checking account? Want a savings account? Do you want investing? Roth IRA, retirement accounts, financial advisor, cryptocurrency, normal stocks. They, I think, are exploring options, but they do have IPO. They have margin. These are things where they're going to attract clients or customers or members, as they call them, and hold on to them. Why? Because they can also get you into a loan product or a savings or a checking from any one of their verticals. They can pop you into another one, and I love that about SoFi. Now, the next group of companies, the next three areas that I'm really going to be talking about are areas in which I am just putting money. I'm continuing to invest in these for the long term, and we're going to cover this one first because it's the one that best fits that description, and that is my Roth IRA over at, let me guess, SoFi. So I've been putting some funds into SoFi for a very long time. This was the first place that I really began making investments, and I am heavily focused on my retirement. This is that portfolio for me. This is where I am putting the majority of my retirement savings or fund right into here. You have SFY, SFYX, VB, VEA, and VWO. You can see the allocations to those there. And you can also see the fact I have lost money on every single one of them, which I love. At one point, I was up in my portfolio 25%, up over $1,400 in profit. I have now time traveled back in reverse to be at a 0.56% loss, having lost $45. I am telling you, this is a blessing in disguise for investors who are young, have retirement accounts, have retirement savings, etc. You can now plow money into these avenues and help set up for your future. And that is exactly what I am focused on right now. My Roth IRA at SoFi is my biggest investment. The most amount of money goes towards there. It is a major focus for me in the broad scheme of my entire portfolio. This is the one that I am most heavily focused on because it is tax advantaged. It is tax free at retirement. There's a cap, so I might as well put as much as I can in there. And I've time traveled back in reverse about a year and a half at this point to pre-investing me levels, which is fantastic for the idea of compounding in my retirement. Next thing, and next portfolio that I'm continuing to invest in is my other Roth IRA that I have covered extensively within the dividend journey. The link to that's going to be up in the top right-hand section. There's my right. Of this video. Go ahead, click on that playlist, watch all of the videos. I stopped including the episode number, but they all still fall in line of weekly updates of this exact portfolio right here. So I'm not going to dive too heavy into it, but you can get the gist. All dividend plays, all dividend stocks, all stable, blue chip, solid companies. And you can see my total loss here over on the right-hand side. Negative big in most of these positions with the exception of the one medical play or healthcare play in Johnson & Johnson. I am averaging into every single one of these consistently. I guess Siri wanted to talk. I'm averaging into every single one of these every single week as much as humanly possible, or not every week, but you'll get the updates over on the Dividend Journey playlist. So go ahead, check that out. But I'm continuing to invest here. Why? Tax advantaged, stable blue chips that I understand. And the last place I am placing some of my funds is going to be this portfolio right here, which is a little bit more growth focused, but I also have a few stable companies in here as well. I have Disney, Target, J&J, VTI, Google, Starbucks, and Amazon. Again, these are businesses that for me are very long-term plays. Easy to understand, and I'm going to get them, most of them, at a very cheap price for the long term. You can see I'm down nearly 40% in Disney, almost 40% in Target, 10% on the total market, 20%, 28%, and 32% respectively in Google, Starbucks, and Amazon. I am continuing to buy these companies up. This is what I have been waiting for so long. I was purchasing at all-time highs, premium prices for these stocks. Now I'm getting an opportunity to buy businesses I love, I use, and I understand at cheap prices. So I'm just going to continue to average into these. I think Disney, Target, Amazon, Google, they all have bright futures. Johnson & Johnson is the one I might move on from at some point to kind of consolidate my position in that stock over in my Roth IRA where dividends will make the most sense. But for now, it's going to be over here as well in my public portfolio. You can go ahead, follow me on public. My username is right back here or the link in the description. So with all of that being said, that is what I am buying. That is what I am selling. The main factors, the main reasons why I have bought and sold any of these stocks over the last little while. If you don't understand the business, do not invest in the stock. If you don't know how they make money, don't invest. If you don't know how they can lose money, don't invest. And with that being said, thank you all so much for spending some time with me, listening to me ramble. I hope you enjoyed this video. Hope you're able to pick up some insights or learn something new. If you did, make sure to hit that subscribe button and that like button. If you've made it this far in the video, comment SoFi Invest. Those two words back to back. Make sure you go ahead, comment that down below. I'll make sure and give you a like or a heart. Thank you very much for watching, and I will see you all in the next one. Take care.